Hey guys, Chris Wong. For this video, I'm going to be showing a video between myself and Paul Santori from Better Call Paul having a discussion about margin usage. And I'm actually right now just walking outside with my 21-month-old son. I figure I could use some fresh air and my son could use some fresh air as well, get some vitamin D. But right now, I'm just thinking about things I forgot to mention in the video. Like, I actually forgot to talk about how I used to have shares of WNTR from YieldMax, and I actually bought a lot of shares sometime last September or October when MicroStrategy was near its high point and WNTR was at its low point at that time. I still don't understand how inverse ETFs work, and I see that the share price of WNTR is lower than before, even though MSTR and MSTE are at its low points. I would say I got lucky when I was selling shares of WNTR over a period of time when I was settling a margin call, because it was one of the only YieldMax funds that I actually saw go up in share price, and I was able to sell WNTR shares at a profit. So having the opportunity to talk to Paul Santori, in my mind it felt like I was talking to a TV star or a movie star of Blossom. If I were to compare Blossom and Hollywood together, when I was watching Better Call Paul, it actually reminded me of the show Breaking Bad because of Better Call Saul. And the actor that comes in mind when I'm talking to Better Call Paul is Bryan Cranston, the guy who played Walter White in Breaking Bad. Shaved head, glasses. The only thing missing is a goatee. And now I would transition to our discussion.
All right. Hey, everybody, it's Paul here on my channel, Better Call Paul. And today I have a special guest, Chris Wong. You can find him on Blossom under Chris Wong Investing. And he also started a YouTube channel about a year and a half ago called Chris Wong Investing. Chris, welcome to the channel.
Thank you for having me here.
So Chris and I have been talking a little bit off camera, and Chris wants to talk a little bit about his journey and share how you don't have to be, a high income earner in order to invest, right? I guess it's a lot about budgeting and how you use your money to your best, I guess, abilities or your best opportunities and take advantage of what's available. Maybe you can just explain to people a little bit, Chris, about yourself and your situation and how you started investing.
Okay, so for many years, I've actually worked a low paying job because I can start from, like, let's say my undergrad and from 2005 to 2009. I did an undergrad in accounting, and I would say around that time during the financial crisis, I lost interest in it, and I found it very difficult for me to find work, saying that I did not have enough work experience. So when I eventually got a job that had nothing to do with accounting, and even though it was low paying, I decided to just work and save my money. And I might try different career paths to see if it would work for me, but I wasn't happy with it, and I didn't fully complete them. So then I just continued working, and then continued switching jobs, something that's closer to home. And then now I work in a retail setting, but more providing nutritional advice, but still doing retail work and back office work.
Okay, Chris. So, was it just in the last few years you decided to start investing, or had you been investing when you were younger? What kind of an investor would you classify yourself as?
I would say I'm the type of investor just like Adriano from Passive Income Investing.
Hmm.
I like the dividend income. I got started in 2022 on a consistent basis. I looked into it in 2020 during the pandemic, but I actually lost my job during the pandemic, and I didn't have enough investment confidence that time, or I would say enough capital to, let's say, take some more risk and learn about investing. Plus, at that time, the ETFs available at that time were not available compared to what we have available today.
Yeah, there's definitely a lot more options now than there was back in early 2020 to 2022. So you mentioned that you work retail. You don't have as high of an income as some people your age, but you've managed to invest. So do you have a certain system you use? You budget for the month. Do you invest weekly, monthly?
I invest, I would say, on a weekly basis.
Hmm.
Sometimes, uh, even on a daily basis too. Like I just check my account every day, see if there's like a share or two I can buy, see if it's like a little bit cheaper. Um, the benefits of Wealthsimple and even Questrade today is commission free, so I don't have to worry about paying $10 just to buy one share.
Yeah, it's amazing. You can even if you have $20 or $30, you can always find something to invest in. Now, we also talked a little bit about margin. So, were you using margin before Wealthsimple added it to the platform, or just after they added it? That's what I did. I waited until they added it. I never really considered using margin until it was available on Wealthsimple.
I started using margin on Questrade,
Okay.
and that was way before the margin became available on Wealthsimple. And I would say, as of today, like with Questrade, it's a learning experience. But if I had a choice between whether using Questrade or Wealthsimple for margin going forward, I would say just stick with Wealthsimple because the margin rate is a lot cheaper.
Oh, that's good for
And
people to know. So you find Wealthsimple. I've heard people, don't like Questrade as much as they used to. I haven't really talked to anybody who said how great they think it is anymore. But it's good to hear from you that you find Wealthsimple easier to use and has, I guess, a lower interest rate for margin.
yeah, the only thing I found more understanding on Questrade for using margin is that
Hmm.
you can actually clearly see what your cash balance is. So you only charge margin, or you only consider using margin if your cash balance is negative.
Right. Okay. So maybe you can tell us a bit about your margin account, what kind of ETFs you decided to buy.
Should I go by what I do today, or what should I go by what I did like back then when I first got started?
Well, it's up to you. Yeah, you can tell us a bit about how you started out and then maybe how you changed your strategy.
Okay. So when I started on Questrade, because my Questrade account is all USD focused, so I actually decided to go with more the YoMax products like YMax, YMag,
Hmm.
even the Defiance like QQQY, um, IWMY,
Hmm.
and even the Roundhill ones, QDTE, RDTE, XDTE. I always thought that the more frequent you can get your payments, the easier it is to pay down your margin.
Right.
And with Questrade, the margin interest rate at that time was like a total of 12% for USD. So
Wow.
that,
12%. That seems high.
yeah.
Yeah.
And I remember,
Now,
I think it reduced down to like 11.25%.
on Wealthsimple, I think, what is it, 6% for USD?
Yeah, I think about 6.75%
Okay.
for, I think it's for premium members or for, but then I think it's also a little bit higher for core members.
Right. I can't believe Questrade's that high. I don't know who would want to use that. That seems almost too high. So how did you find? I know that some people had problems, myself included, with some of the Yield Max products. I finally sold out a YMAG. I sold out a YMAX. Actually, I even sold out a QQQY from Defiance. I still have my Roundhill. I got my QDTE and my RDTE. So how did you find using those ETFs in your margin account?
I thought at first they were like pretty good, like even with the 15% withholding tax.
Hmm.
But over time, I guess because the dividends kept decreasing over a period of time, and the dividend yield is usually based on the current NAV.
Yeah.
So it would seem like if I estimate that it was going to pay down my margin within like 5 years, if I didn't do anything, then I wasn't sure if that was going to happen if the dividend is going to be a little bit less over time.
Right. So you finally decided to swap out of those and move into other holdings?
Yeah, over time, I decided to sell out of QDTE, RDTE, XDTE, YMAG, YMAX. I had those in my Questrade margin account, and I actually sold them to buy HHIS.U.
Hmm.
And at that time, when I made that decision to buy HHIS.U, I averaged around 1050 at
Oh,
that time.
that's your average price?
Yeah, in my margin account.
Yeah, that's a great cost basis for HHIS.
So, but then I was like deciding, should I wait till it goes back up or should I wait till it goes back down? And then I saw that HHIS.U has a potential to go back up in share price.
Hmm.
And at that time, if I was getting HHIS.U and the dividend was like 26 cents a month, and if it stays 26 cents a month going forward, I would have got almost the same yield on cost as QQQY.
So are you still using Questrade for margin, or did you decide to switch to Wealthsimple?
I'm still using Questrade for margin. I'm just not adding more on my margin account at the moment.
Yeah,
I just letting the dividends itself pay back the margin balance over time. It might take like 5, 6, maybe even 7 years,
yeah.
just not doing anything.
I find I mean I could be wrong, but it seems like that interest rate is just too high,
Yeah,
right? Because that's going to eat away at a lot of your profits.
it is. But for me to close a margin account because my margin account balance is a negative number
Yeah,
and it's backed up by my TFSA.
and
So for
that's your Questrade account.
yeah, so I have that problem with my Questrade and my Wealthsimple.
Oh boy. Okay. Okay. So that's Questrade. Tell us a bit about your Wealthsimple accounts.
So I had the similar idea when Wealthsimple opened up, and then because the margin interest rate for the Canadian was like 5% or
Hmm.
even less if you're a higher membership. I think it's 4.45% as a premium member.
Right.
So then I decided to open up the idea of getting Canadian funds and still getting USD listed funds. So then, and because Wealthsimple is the one I can just open up easily on my phone, I can just check my stocks like very quickly, make quick buys or make quick sells.
Yeah.
And I find overall, after my experience with the USD, I found going with the Canadian listed ETFs like HHIS, Big E, even trying to start getting some more lower yield ones like HDIV
Hmm.
and UTES, as long as I can just eventually withdraw the dividends minus the margin interest rate, I think to me that's more sustainable over long term than just trying to pay back the margin as fast as possible with the high yield dividends. But then the total portfolio value, I think, is going to go down.
Yeah.
So in a way, it felt like if I bought YMAX, YMEG, and have the margin or have the dividends pay back the margin, I felt like I was buying a depreciating car after like 4 or 5 years.
Yeah, no, I agree with you. I think especially in margin, you want from my own personal margin account, I try to go with as defensive positions as possible. So, like you said, Utes, that's utilities. Any there's more than one, obviously utility ETF, but I like the utilities. I recently added the healthcare sector because that's defensive. But then again, like you mentioned, HDIV, I think HDIV is a good one. HYLD I have as well. And then if you can do like the Nasdaq, S&P 500, those are the type that I like to hold in my margin account because, like you said, you don't want ETFs that are losing, depreciating NAV and share value or share price over time. Then you're just going to have lower distributions. Yeah, I don't think that's. I think you've noticed that that's not really a sustainable system in your margin account. Even in your TFSA, it's probably not the best way to go.
Yeah, it took many videos from Adriano. I know he has a different opinion than Harry about the withholding tax,
Yeah.
and 15% withholding tax, it does add up over time.
Yes.
And most of the funds on the US listed ones don't have the 25% leverage.
Right. Yeah, I think you know what nowadays. So if you go back a few years, I did open up a US dollar account in my TFSA because at that time, Yield Max and Roundhill, their ETFs had such high yields that even less than 15%, it was higher than anything you can get from Canada. But now with with the great funds we have in Canada, I think you're better off just to buy the Canadian listed ones, like Adriano suggests. And if you want to have U.S. dollar ones, just put them in your RSP. Then you don't have to worry about the 15% you're going to lose in withholding tax.
Yeah.
Do you have a strategy for your TFSA, because you link your TFSA to your margin account, so you want to make sure your TFSA balance is as high as possible.
So I would say because if I want to move towards financial independence, retire early, it's always best to practice it before resigning from work or before trying to pursue other interests that doesn't require having a job. So I would say like I am trying to withdraw cash on a regular basis to somewhat simulate what it's like to live off the portfolio, and then make it a goal to like try to reinvest, hopefully at least like $300 a month out of the account,
Hmm.
and then keep my work income aside for like either as a backup to fund other accounts. So outside of Wealthsimple and outside of Questrade, I do have a separate RBC TFSA where I just follow dollar cost averaging $100 every 2 weeks out of my paycheck, just as a way to show people in the future or myself that $100 every 2 weeks will still build you a portfolio, even if it starts out slow at the beginning.
Oh, for sure. So in your RBC account, what ETFs are you buying?
I just have Easy from Evolve
Hmm.
and KG.
Okay. Yeah, I like Easy. I have Easy as well, and Payg. So okay, so you're putting $100. You put $50 into each one every 2 weeks.
I actually kind of rotate because with RBC,
RBC has the fees.
oh, I actually signed up with the Go Smart on
Yeah,
my phone, and they give me 50 free transactions a year, I believe, or the first year at least.
yeah,
So I just had to try to limit myself to just like two transactions a month.
yeah. But when you run out of your free transactions, something to think about. Wealth Simple, you can have more than one TFSA, right? So if you wanted to, you could move your TFSA from RBC over to Wealth Simple. I actually did that recently, and just keep your Easy and Payg account separate, right? Keep it as a separate TFSA, and you can put your $100 into there, and then you don't have to worry about any more fees.
Yeah. But I also think about too is diversification to me is not just having like 10 or 20 different funds or different fund managers,
Hmm.
but I also think about having like an account separate from all my other brokerages or something separate from all my typical ones.
Right, right. So right now you have Questrade, Wealthsimple, and RBC. You kind of like to keep a little bit of your money in different brokers, just I guess for safety purposes.
Yeah. I actually even started a joint account with my wife on Wealthsimple.
Hmm.
And even though we both didn't max out our TFSAs, but it was just an idea I had in mind to build up an account that can actually eventually pay rent.
Nice. Yeah, that's a good idea. Now, if you do ever decide to put all of your accounts together at Wealthsimple, I think once you become a, what do they call it, a premium member, or even higher, I think once you have over 500,000, then you end up getting like lower interest rates for your margin account and
Yeah.
other. There are some benefits to having the money put together, but like you said, diversifying amongst different brokers can, I guess, give you an added level of safety. So, is your wife, is she as passionate about investing as you are, or she kind of lets you take the ball and run with it?
She trusts my decision,
Hmm.
and I usually give her heads up to say that like something like MSTE, this is just one company, and
Yeah.
this one has a lot of fluctuations. So if she ever makes the decision to invest in it, I would say just keep it a low balance and just maybe do it once in a while, but make sure focusing on the indexes, focusing on HHIS.
Now, you mentioned you've experienced a margin call before. Maybe you can. I haven't yet, so maybe you can explain to
Okay.
me how that works, and how do you get out of the margin call?
Okay. So I'll start off by saying that I experienced multiple margin calls. Most of them are smaller ones.
Hmm.
So the first margin call I remember experiencing, it was like maybe $100. So usually you get an email by your brokerage,
Okay.
or you get notification from your brokerage when you open the account. But depending on the brokerage, so Questrade, I believe the notification is at like 9 o'clock in the morning, and Well Simple, the notification is at I think around 7:30 in the morning, and you get an email, and then you get that as a first thing when you open your brokerage. So they will say this is the balance that you need to pay up, or you need to liquidate something that's going to lower your balance. And then they give you a deadline. And sometimes the deadline can be like 3 business days. Sometimes the deadline can be immediately. And sometimes they give a warning saying that they may have to make a decision before the deadline.
Oh wow. So if you don't act on the email quickly, they might do it for you.
It's a possibility.
Yeah.
And sometimes I've taken the risk and just did nothing.
Hmm.
And the day after, it corrected itself.
Oh really? So do they sell shares for you? Is that what they do, or just the account balance went up just because the share prices went up?
I think the account balance went up because if they sold shares, I think I have to find in my activity that shares got sold. But
Yeah.
it's never happened to me yet that they sold on my behalf.
Okay. So, Chris, from the couple of margin calls that you've had, have you like does that scare you, or does that make you kind of change your strategy a little bit with using your margin, or are you just kind of sticking with your current plan?
Depending on the situation.
Hmm.
So most of the margin calls I've gotten, like I've had a margin call as low as let's say deposit $3.
Oh, okay.
I've I've had margin calls as big as let's say $4,000. So I had to deposit.
Wow. So if you had to deposit $4,000, would you borrow that from, like your bank line of credit, or do you keep some emergency funds for that particular reason?
I've actually I don't have a line of credit,
Hmm.
and I'm not sure at the moment if I want to open it up because I'm not sure if that would solve my long term thinking of buying too many shares.
Right.
So I did have some money I put aside from in a separate bank account, and I've used it all up already. And there's times I've actually asked my wife to lend me some cash,
Yeah.
but my wife is a lot more safer than I am.
Right.
So my wife is not the type of person to go all in investing like I am.
Yeah. Okay. So you guys are kind of like yin and yang. You're the gambling investor, and she's the safe investor.
Yeah,
Yeah. I tell you, Chris, I don't know if I don't know if I could handle it if I woke up and saw a margin call. So you're braver than I am. I'm doing everything I can to avoid getting margin called. What are your thoughts on MSTE? Are you a Bitcoin bull? I was a little bit surprised that it went as low as it did. I mean, I knew that it would swing. It went up to $19. It came back down, to $7, $8. I thought, but under $2. I didn't think it would ever go that low.
I think it's because they keep paying on distributions. So the total return between comparing MSTR and MSTE,
Hmm.
you gotta kind of look at it side by side and also include the total returns in your distribution
Yep.
or in the total return calculator. Um, I mean, I know I'm not as thoroughly researching MSTE or MSTR like Adriano does, but seeing like a few videos or listening to a few videos by Michael Saylor, if he's brave enough, I think to talk about it, despite what's happening in the stock market, I don't think there's like a very high chance, or I don't think there's going to be a chance that MSTR is going to go down to zero.
Right. Yeah. So are you anticipating a kind of like a Bitcoin recovery later this year, or you just kind of sit back and wait and see what happens? I mean, nobody really knows 100% for sure what's going to happen, but
Yeah, it's hard to predict these
yeah.
things right now. Like, I'm sorry.
I was just going to say, are you buying at these levels? I mean, it's pretty cheap right now. I mean, I was buying it when it was, I think, $13 a share, so under $2. It almost seems too low not to buy, but at the same time, I don't want to put everything I have into MSTE and risk losing it all.
I'm trying to buy as if I can, but I guess I'm trying to mix trying to get a lower price and then trying to mix Adriano's idea, just buy a portion every single week.
Okay. So you're buying a little bit of MSTE every week.
Yeah,
Yeah.
I don't have as much money as he does, and I
No, none of us do. So, other than MST, what ETFs are you adding to on a regular basis? Well, okay, Pagey, and you already mentioned what was the other one? Pagey. Shoot, my memory's terrible. In your RBC account.
I like to add HHIS,
Hmm.
uh, Biggie, Easy. I actually picked up HHLE when it was below $8.
Oh, yeah, I started buying it below $8 too. I wish I had bought it sooner. When I first started thinking about buying it, I think it was around 730 or 740, and I hesitated for a week or two, and it shot up like 50 cents.
And then I like to get shares of Estee.
Oh yeah,
And
Estee. What do you think of the Daymax series? How do you like their strategy?
I think it's good overall. I think it's stable. I think there's good total return.
Yeah, I think not we can't Chris and I can't give anybody financial advice, but I think you'd be wise to buy a lot of S Day or Q Day, C Day. Any one of those seem to do really well. Of course they're going to fluctuate with the market, but I think there's a lot of upside potential, and the distribution seems to be really consistent. And yeah, I think those are definitely going to be winners.
Do you think Estee they have a price fluctuation between, let's say, 2250 is the lowest I've seen and maybe 2550 is the highest I've seen?
Yeah, yeah. Well, I think the S&P 500 has been really, really high, but it didn't take off like the Nasdaq did, right? Because you saw Q Day shot up to about $30. But I think it's a buying opportunity. Buy Estee while it's low.
Yeah. Actually, I had to sell some Estee a few days ago when it was $25.
Hmm.
When just to settle like a margin call. And usually when I sell margin calls, I don't try to sell it down to zero. I just settle it partially. And in a way, I kind of wish I sold more while it was $25, but now it's down to like $24.
Oh, okay. So, Chris, you mentioned that you're actually are you actually pulling some money out of your TFSA to help pay bills and stuff? You're sort of simulating what it would be like to be retired and living off your portfolio.
Yeah, I'm trying to do what I can.
Yeah.
So originally, I would like use my work money and use my portfolio to help me with my day-to-day expenses.
Hmm.
But then instead of like having my work money as my primary way of funding my lifestyle, I thought, why don't I just try to find a way to make my portfolio the primary way, and
Right.
then the work income is like my backup.
And how's that working so far?
It has its challenges.
Yeah.
Like I remember, I tried to budget for like daycare, my car insurance, half the rent, and maybe some like getting some gas. But then I didn't budget enough to like go out to dinner with my family.
Hmm.
So that's something I have to consider as well.
Yeah.
Or like we went to Costco and we spent more money than we should have.
Doesn't everybody, eh? So daycare, it's very expensive. They talked about that $10 a day daycare, but I don't think that's very easy to find, is it?
It's not like my daycare expense is like I think $500 a month.
Wow. Now you can write that off, right, against your income, I think.
Actually, I didn't know anything about that.
Yeah, I think so. I mean, unless you're using a home daycare and paying cash, then you might not be able to write it off. But if you're taking your son to an actual daycare where they give you receipts, I would look into that because you might be able to backdate it now. You might be able to write off the daycare expense you had in maybe 2024, 2025. Yeah.
Okay,
Yeah.
maybe I might have included my taxes, but I don't remember if I did.
Yeah. Well, it's a good one for sure because you're paying. I mean, you're paying $6,000 a year, so it's definitely a good tax write off. So, Chris, if one of our viewers was thinking about getting into margin, would you have some advice for them starting out? Do you think your approach has been too aggressive, or
I would say the most important thing is start investing first with no margin.
right?
And when I mean like investing with no margin, I mean not just like buying a share to like every 2 weeks and then close your account for 2 weeks. I mean be the type of person who is probably going to be on your account daily, or be the type of person that's going to that's willing to watch YouTube videos and do research on certain funds. And they have to take time to like learn about margin requirements, even if they have to talk to customer service. I did that myself at the beginning. I talked to Equestria customer service for like an hour just to get all my questions answered.
That's actually a pretty good idea. I never thought about that. I did, like you said, I've watched YouTube videos. Well, I talked to JJ, right, from Convos with JJ and Leon. We talk with these guys about setting up margin and using margin, but I never thought about calling Well Simple and actually asking them questions. They're probably the best source of information, right? Because they're the ones that are going to be margin calling you. But I agree with you as well. You should start investing, open your TFSA or RSP, invest. And I always say probably be at least 5 years in before you really want to start using margin. Because if you haven't been through any market swings, any volatility, then having a margin account is probably going to just make you even that much more of a nervous investor and likely to make some big mistakes.
Yeah, I would also say that how much margin you use also depends on your portfolio value as well,
Right.
because the amount of margin or the amount of money you can withdraw out of your account is limited to your actual portfolio value.
Got a fly flying around me here.
Left the door open.
Yeah. Chris, why don't you tell people a little bit about your channel? Do you make videos weekly or monthly? I know you've got a young son and you're a busy guy, but maybe some people would like to check out your channel.
So it's a mixture of maybe if I made a few changes like to my portfolio. I even documented or even talked about experiencing some margin calls in some of my videos. And I would say some of those are one of my most watched videos at times, whether I get good or bad comments, but it's okay for me.
Yeah.
Being a YouTuber, even I'm pretty sure Adriano receives a lot of negative feedback from random people.
Yeah, you're always going to have people who agree with what you're doing and support you, people who are just supportive of your journey, but then there's always going to be some people who think that what you're doing is wrong, and because they're just typing on a keyboard, they're rude or they're mean about it. But it is what it is. You can always block those people, so you don't have to let them continue to beat you up on your own YouTube channel.
Yeah, and sometimes I'll just leave the comments, but that doesn't really affect me. So it's just because I know that other people that take it seriously,
Yeah.
they can see the comments too, and they know like they're not posting nice comments as well.
Sure, sure. So I don't know if I heard. Did you say how often you're posting videos or?
Oh yeah, it used to be like every week or every 2 weeks, but now I guess because I'm getting more busy, and even my full time job,
Mhm.
I've actually been more busy at times as well. So that it gives me less time to make videos, or it gives me less time to like take the time to edit videos.
Right.
I think one time I tried to edit a video like 10 o'clock or 11 o'clock at night, and I realized I got really sleepy, so I couldn't finish.
I'm very lucky, Chris. I don't know if you can do this or not, but my wife taught herself how to edit videos using Canva. So I make the videos and she edits them, so I don't have to worry too much about the editing process. So I'm lucky that way.
And do you find like when you talk in your own videos, um, because I have this experience myself a lot. I made a video for like maybe 15, 20 minutes of just talking,
Hmm.
whether I'm outside or inside the house. And then when I went to edit out the parts I didn't need or the parts I screwed up on, I was left with 8 minutes of content that's useful.
Yeah, that can happen sometimes. I usually don't make my videos too long to begin with, and yeah, we don't usually, to be honest with you, we don't usually edit too much out. So, what I do, 8 to 10 or 12 minute videos, that's usually what you're going to get in the end. So it is what it is, imperfectly okay.
Okay.
Yeah,
Well, I did want to talk about the margin requirement and how my thoughts change over time.
sure.
I believe in, I think in your previous videos, you, JJ, mentioned that you only like to stick with 30% margin requirement.
Yeah, I do hold two that are 50%. I have HHLE, and I have one other. I can't remember which one it is, but I have one other that are 50% margin requirement. Otherwise, I try to use the ones that are 30%. So, yeah, what are your
Okay.
thoughts on that, Chris?
I think if you're going to use 30%, the only benefit I see when using 30% compared to a 50 or 100% is if you are the type of person who knows how to use margin moderately,
Hmm.
that can withstand like even the 30 or 40% drop in the market. I think that's when it could be quite beneficial. Now, if you do take like high risk and you want to try and maximize your income, and you bought like HHIS at like a decent low price, then you can buy a lot more than MSTE.
Right. Yeah, because HHIS is only a 30% margin requirement. So how does it work if it has a 100% margin requirement? Doesn't that mean you basically can't borrow any money?
That's what I thought at first, but I think it's calculated overall based on what you have in the portfolio, and I just let the brokerage do the work because the brokerage itself makes the final decision whether margin call or not.
Okay.
But the benefit of buying in Wealthsimple is that when you make the decision to buy a fund, it can tell you how much buying power available you have to buy at the moment.
Yep.
So when you buy something 100%, it's going to be a lot less buying power than buying something that's 30%.
Right. So you think it's worth buying ETFs that have higher margin requirements? Is that what you're saying? Or
Some situations, I think it can be beneficial.
Mhm.
Like I bought Easy, which is 50% margin requirement, and Biggie right now finally got switched to 30%.
Oh, really?
So I think it has something to do with how popular its fund is, or how many people are. What's that term? Is it the
I think it has to do with the trading volume.
or is it AUM? Is that what it is?
Um, it might be a combination of assets under management, but also I think the daily trading volume might have something to do with it.
Okay,
Yeah.
but sometimes what I had a hard time understanding before was some of the funds, like especially some of the US ones, I guess because of the high volume,
Hmm.
they had 30%, but the total return was less than some of the Canadian listed ones, and some of them were 50%.
Right. Yeah. It might just have to do with that trading volume assets. Actually, if anybody can clarify for us, just leave a comment down below for Chris and I. And this is how we learn, right? Because there are definitely people who know a lot more than I do, and maybe you do as well. And they can teach us. I guess I could always call Well Simple and find out about that.
Yeah, I would say like the 30 or 50%. The most important thing to me, and that's why I consider getting myself 50% and even 100%, is how much you have to sell in order to sell a margin call.
Right.
So if it's 30%, you have to sell 3.33 times the amount of shares, or sorry, 3.33 times the amount dollar value to sell the margin call. So I'll give an example. Let's say your margin call is $1,000. So if you're not depositing any money, then you're going to have to sell at least $3,333 worth of, let's say, HDIV just to sell the $1,000 if the market doesn't fluctuate up and down anymore.
Right. So you could potentially lose a lot of money if your ETF is below your average cost when you're
Yeah.
selling it.
Yeah.
Yeah, that's the part that scares me, Chris. So Chris, have you ever pulled any money out of your margin account? I mean,
I have.
I think you said right now it's negative, but when it was positive, did you ever pull money out to pay bills or to do anything else?
I have. And I've still pulled out even when it was negative balance
Yeah,
because I guess Wealth Simple looks at it as a total between your TFSA and your margin account.
right,
So, like, if I want to stop using margin, like, I know I would have to liquidate a portion of my TFSA just to close the account if I want to. But being an income investor or any type of investor, the most important thing with margin using, or even not using margin, is you want to be able to hold on to your investments for the rest of your life.
right. So when you take money out of your margin account, what I did was I actually transferred some of what I considered to be profits from the distributions and having some share price appreciation. I transferred the money to my RSP, and I transferred some money to a non-registered account so that I could buy ETFs in those accounts as well.
Yeah, I did stuff like that too as well. I'm doing that more in my Simple account because the margin interest rate is much lower,
Right.
and also because the margin interest rate is much lower, I'm not as concerned compared to Questrade about getting the tax benefit for the for deducting margin interest.
Hmm.
So that's one of the reasons why I decided to leave my Questrade margin account alone, so that to make it a lot easier for paperwork, just whatever margin interest I accumulate in that account, that can be my full benefit for my taxes for next year.
Right. You can write off some of the interest against your taxes. Have you done
Yeah,
that before in the past, or
I have.
I don't have any experience doing that. Is it fairly easy to do when you do your taxes?
Uh, I would say it's. I think it's straightforward to a point. I might have to like research a couple things on Google,
Hmm.
but what I found was there's a certain line or a certain form you just fill out on Simple because I use Simple Tax,
Yeah.
and then I just try to calculate the best I can how much margin interest rate to put in there. I don't want to like put too much and overstate it and I get questioned. So I'd rather put less or put the always put the correct amount.
Right. Makes sense. Makes sense. All right, Chris, I know you're a busy guy and you got plans with your family today. Was there anything else you wanted to share with the viewers about margin? Do you think it's important that we haven't discussed, or do you think
Oh yeah,
that's about it?
the one thing that's important to me for margin, or I think to the viewers, especially when it comes to like MSTE and CNYE,
Hmm.
I'm not sure why the margin requirement once the share price goes below $4, I think it changes from 50 to 75%. And then if it goes below three or it goes below $2, it changes to 100%.
Right.
But then when you have like other funds, like let's say MTYY by Granite Shares or MSTY by Yomax, there's still I think 50%. I think even at one point MTYY is 30% because they have a higher share value.
Right. Yeah, I'm not sure again how they determine it. I know, for example, LBS, the split corp from Brompton, it had a 30% margin requirement. When they did their stock split, they changed the margin requirement to 50%, but it only lasted for a few weeks, and then they dropped it back down to 30%. So yeah, actually, maybe that's not a bad question to give Wealthsimple a call and find out how do they set their margin requirements.
Yeah.
Yeah.
So sometimes I think like reverse splits can be beneficial for some people to in order to bring up the margin available buying power because in one way it would be nice for me to have MSTE have a reverse split just so that the margin requirement can drop down.
Right. Right. So if they did
But
like
then
a 10 for 1 reverse split and it was $20 a share, let's say, then maybe the margin requirement would only be 30%.
yeah, but the only thing I got to be careful of if there's a reverse split, my buying power goes back up. Is I want to be careful not to accumulate so much more and then realize I'm going to be in the same problem again.
Right. Right. Yeah, Chris, I don't know. You're a pretty gutsy guy buying MSTE in your margin account, but I hope it works out well for you.
Yeah,
You got me thinking about it, but I don't know if I'll do it. Maybe 100 shares just to boost the income in my margin account a little bit, but I'm not usually a risk taker. So even though it seems like I have some ultra high yield ETFs, they're not in my margin account, so I don't worry about them as much. So, anyways, Chris, I appreciate you spending the time chatting with me today, and maybe someday down in the future we'll talk about margin again.
yeah. Thank you for having me on your channel.
All right, Chris, we'll talk to you later, and everybody else, have a great weekend. Talk to you soon. Bye for now.